changed carryover stocks in the USDA report. Jerry Gidel is ready to assess that and the markets, the commodity markets, right here on Connected Farmer, your channel to keep you up to date with the latest trends in agriculture and livestock. So, Jerry, we had a pretty wild week in terms of market reports. Let's start by the USDA report, and then we talk about South America, as many of our viewers also want to hear about South America. But first, what was that carryover stocks that the USDA reported this week?
Well, we had quite a contrast between the corn that took a significant decline from what people's expectations were to the wheat side of the ledger ended up having a significant increase from wheat to from last month to now. A lot of that's in the spring wheat areas, which it's the first time they officially got a survey of producers' ideas out there. So I guess they're optimistic up in that part of the world. Soybeans, I should say, really didn't see a lot of changes from the previous month here on old and new crop carryover stocks, but they're still substantial. So that's part of the reason why that the beans ended up kind of following the wheat lower here today. The wheat, interestingly enough, kind of slipped down towards its recent low. So we'll see what that does when we look at that a little bit later. But let's look at the corn market to begin with. Quite a significant change in some of the data here for old crop. Now, to some extent, the exports that are sales right now that are 10 or 15 million from the USDA's projections with 9 weeks to go is really suggesting that that would be higher. When you look at the actual U.S. shipments that are posted on the USDA sites, they really are looking at the corn that leaves through the export channels in New Orleans and down in Houston they're really water directed. And since Mexico has become such a significant partner here and demand for our corn with their expanding cattle operations and things like that down there, they really just train that across. They basically run them back and forth all the time, but then for basically from Kansas City down there and back. And so it turns out that we've got a significant amount of higher shipments than what we see on some of the weekly updates that we get. So that's a little deceptive for people to understand. But in reality, the thing is the 75 million increase in exports and 75 million increase in actually feeding usage, which is another twist here. This is really like the USDA kind of staring at the livestock numbers that we had here updated during June, where we were nearly 100% of a year ago on cattle on feed numbers. They're just slightly lower than and to some extent, the hog operations having also that in the U.S. that and if you look from the 1st of June until the 1st of July, we really had a lower market the whole month. So the prospects of producers out there and cattle operations and that looking at these corn prices, looking at them being attractive, interestingly enough, even versus the futures here in the western parts of Iowa, the cash price is 20 cents over what the futures are, and I've even heard 50 to 75 over in some of the areas in the Plains area where you've got cattle operations in Nebraska and Kansas. So there's definitely some demand out there for the corn at this juncture, and that change that we had of 100. Well, actually, they also decreased imports All right, I take that back. They increased imports by 5. So that all being said, 145 million decline, it takes that number down below 1.9 billion bushels, and that's going the right direction. And then the interesting twist is that that lower production kind of compensates for the USDA's higher planted area that we found out about on June 28th. And so the differences in output month to month here is only 95 million higher. And the USDA decided that because we're having strong feed demand, they thought that that might continue into the new year of 25, 26. And exports had that 75 million increase, so the increased new crop by 25. Voila, there's the 100 million of the night versus the 95. So virtually we were unchanged in carryover stock. So corn ended up a couple, 3 cents higher, but it was a lot stronger initially in the market here. But as we mentioned, this wheat market, which is also can be a feed factor in here, but I just don't know that that's going to be a strong one just yet here in 2024-25. But that's something to keep in mind that going forward. The USDA back on their quarterly stocks report on wheat did see a slight increase from their previous month's expectations. They reduced their exports, decreased their feed use a little bit, and so that was part of the 14 million increase in stocks up to 704 million. The real twist turns out to be the production number. Winter wheat numbers and that. I think last week we kind of went over the idea of the fact that the acreage numbers had a 650,000 increase in winter wheat seeding their harvested area, which suggests that and they were all in the Texas, Oklahoma, Kansas, Nebraska area, and that. So the prospects of maybe the producers and wheat guys out there trying to scramble to get every acre usually means you end up having a lower average yield when you increase something like that so late in the season. But that wasn't the case. They did take Texas down 2 bushels, but I think there was down 1 bushel in Oklahoma. They were up 3 bushels in Kansas, which is that's the big state. It's got the biggest harvested area, all that kind of stuff. So the hard red wheat was up. Soft red was also up slightly. I thought that number might go down just because of the fact that they took 240,000, I think, 1,000 acres out of Illinois and Indiana. It looks like the producers there decided that they'd rather plant corn or soybeans. So that being said, you're taking 80 bushel wheat out of that part of the world, and you're adding 35 to 40 bushel wheat in other areas. So kind of surprising we still had winter wheat up, but let's don't get too concentrated on that number. It's the spring wheat number was the one that come in and bashed us here today. Yes, we had a slight increase in spring wheat plantings up there on the update we had on the 28th of June, and a big jump of in acreages in Durham, and that the real, I guess, kicker, if you want to say that, in the wheat market was the fact that they had the survey of producers up there are very, very optimistic about their spring wheat yields. Sorry. They're looking for 53 bushels. They previously, the record up there for spring wheat is like 48 and a half. So we're talking about 4.5 bushels over the previous estimate. Most of that's in North Dakota and Montana are the two big producing states. Minnesota and South Dakota are also there too. But I thought there was some dryness out in Montana, but I guess it wasn't enough to slow down the optimism there. Overall, though, that was the big factor here in wheat that jumped up our total production 133 million. Of that total, by the way, maybe 35 or 40 of that is coming out of winter wheat type scenarios at this point. So the 70 to 80 million of this came out of spring wheat, but the overall total definitely came out of, I guess, left field, right field, somewhere at this point, and definitely was the feature and the wheat that really kind of dampened all the enthusiasm here across the board with that factor looking at us there. Of course, the big numbers in beans here today. They were modest changes in those right all across the board here. They didn't change anything on demand here on crush or in exports. They did decrease imports by 5 million. So that kept our carryover stock off slightly here by
Now,
5
for
million.
soybeans, I'm not sure if you were aware of the report from the USDA attaché in China, saying that most of the Chinese government will try to avoid as much as they can soybean imports.
Right. Well, that we're really at the end of this year's crop season, so there isn't. There was they've recently bought a few things on a spot basis in that, but yes, on the old crop side of things, uh, and basically they've been pretty quiet somewhat in the South America too on purchases at this point. Their livestock numbers, I don't know that they're that low, but they've definitely changed their attitude over there in feedings in China. They originally were heavy uh, users of protein to speed up the process of pork coming to market. Well, that ultimately meant that the price of pork was low. So I think they've changed their mind and not trying to have really hot rations for their hogs over there in the short term. Because the interesting thing about it over the last 10, 15 years, they switched from kind of the backyard approach on hog production to significant pork production factories. They've even they've even shown different ideas of doing vertical ones, which is very interesting to me. They don't really have a lot of land space to have the typical approach here in the U.S., having multiple barns across lots of land, and that doesn't fit their bills. So that's a real twist on it there too, on the beans. But no, that the soybean demand situation is definitely highly involved with China, and that's important that we got to keep an eye on because at this point, uh, as I mentioned before, there really wasn't much changes in the old crop, new crop U.S. soybean data today, and that there was slightly down, but 435 million isn't much different than 455 million on carryover stock. We really need to see smaller output in U.S. On this thing, having increases today. You're right, though, in the fact that the Chinese are going to be highly important here in their purchases at this point going forward. They're still going to buy some, but they probably are not going to keep boosting their number over the 100 million metric tons that they bought the last couple of years. There's some, I don't know if they're going to go substantially like 10 million less, but that would be the big factor in here if they somehow or other was reducing their total supplies. This that if they don't increase this, that's not good either.
Now, considering the fact that the National Supply Company in Brazil, or CONAB, has changed very uh, there is a very tiny change of the numbers for the second corn crop in Brazil, and
Mhm.
yet the numbers from Argentina about the soybean crop remain at 50 million metric tons. So, are you bullish or bearish on soybean prices?
Well, I'm kind of optimistic about this market still being very uh, concerned about the U.S. production prospects and that the USDA did not change either one of their yields, the 52 bushel one they've had or the 181. I don't think anybody really expected. There were some minor changes on the trade average guesses, but they don't traditionally make those changes unless there's something quite dramatic. Last year we had dryness in May and June, so they did slice the numbers off slightly from the projections they had back on the May uh, first projections that they put out. But this year, I still think that 181 bushels is quite optimistic type situation for the U.S. And also the 52 bushel beans. I think last year was just 50 and a half bushels, so that's 1.5 bushels less. And last year's corn was 177, so both of them have going to have a excellent timing and everything else to get to those kind of yields. But that's not the key to this year's situation. Is going to end up being uh, our domestic output situation. When you even at 1.8 billion on corn and 435 on beans, if we take a bushel off of beans, that's going to take that to 85 million acres down to 85 million bushels down. So you're going to be talking about 250, which is a lot more in the normal, 350 is where we're at this year. On the corn side, I don't know, the output on corn is really going to be a interesting one at this point. The We've got an excellent, heavy duty export program going on here, but if somehow or other Brazil has a better crop, which is not impossible after this year's crop is down 10 million metric tons or more, and that's going to be competition for us longer term. So from there, so that to me is the interesting thing. I think the price of volatility, though, could still be interesting over the next 4 to 6 weeks. This is the high time in the U.S. about production prospects.
Is it time to buy soybeans and sell corn?
Hmm, that is a possibility, I suppose. I kind of both of them here in the short term are on the low side of expectations, are down at some real core price points. We're down here just a smidgen under $4 on new crop corn. Soybeans down at $11, and that from a standpoint of the markets here, the corn market value wise is probably closer to its long term low than soybeans are. But the soybean crop still has a lot of vulnerability. And I think you've pointed out, and I think your initial question here about the South America is that Argentina had a slightly smaller soybean crop, 500,000. They took 1 million out of, 500,000 out of Brazil and 1 million metric tons out of Argentina. And the twist of that to me is that the real concern over the last 4 to 5 weeks, 6 weeks, has been the excessive rains that we had in Rio Grande do Sul. And yet the USDA did making adjustments there. And but CONAB, they kind of held tight, but they're substantially, like 5 or 6, 7 million less than the USDA's 153. And in the corn side of things, they did increase at 1.8 million this month in Conab, but they're still at 115, 115 and a half, 116 versus the USDA at up at 122 on that. So there's still a lot of differences going on between the US and Conab and what they think the various crop sizes are at this point. But in the short term here, we're still have a few more corn production situations coming out in Brazil, but the beans are completed and most of Argentina's in the bend, so there's not going to be a lot of changes going on there from what's internally going on down in South America. Right at this point, I think that's there is, I think, some slight decline possibilities in the U.S. numbers, but we'll have to see how the final bits of Brazil's crop comes in. But overall here, there is still above normal temps and limited moisture in the second half of July here in the U.S. forecast at this point. One note was made here from one of the weather people here in the U.S. that the La Nina weather situation that's been forecasted to switch, intensify, I should say, here in the U.S. has slowed down recently. So they were a little concerned it was potentially going to happen this August, but that's always interesting. These days, sometimes we're not exactly on the statistics while we still have some pretty significant heat. Right now, if you're west of Denver, Colorado, you think that the La Nina is really hot. We're talking about record temperatures west of in the Rockies and on into California, and that and the West Coast. I think we even got to 100 in Portland. Very, very unusual type situation. So the U.S. climate situation still is in very, very strong fluxes at this point. I guess we'll see what happens. If we have that kind of 100-degree plus type temperatures come into the Midwest, the corn and soybean market aren't going to sit back and say, oh, by the way, I think we're still going to have plenty left in the bin, even if we lose 5 bushels on the U.S. yield. I don't think that's going to be the case, but we'll find out, I guess, depending on what the U.S. weather does. We've got some heat this weekend and first half of next week, and then we're off a little bit, but still lots of projections of hot weather at the end of this month.
Yeah, we'll continue to check that. Thank you, Jerry. See you next
You
week.
bet. Always good to talk, and we'll get together here next week, and also looking at our annual Midwest crop tour. Looking forward to seeing you.